Good morning, everybody. Happy Friday. We made it. It has been a very rough 2 weeks. Things have kind of come back to normal a little bit, at least with my internet, but it left me in a lurch. I got so much work to get caught up on. It seems like it's never going to end. All right, so everything was looking really good last night. We were kind of wedged up really nice against the top of that weekly expected move. And then some news came out. We had that amazing impulse play, and everything was looking really good until a little bit of corona fear came out, some COVID fear, and it started to dump us back down. I believe it's Austria that is the company that is, or the country that is going into a national lockdown and is instituting some form of mandatory shot process. And kind of catching it a little bit off and on Bloomberg, but whatever the little pop and play was that had started out, that all went away once the economic impact of a national lockdown started to be considered. On the agenda today, you can see we don't have very much. Retail sales at 8:30, and that's really about it. The quarterly services survey isn't likely to be all that impactful. Now, keep in mind there always is the possibility that some random survey could one day it be the thing, right? But it's highly unlikely. Still, it's 10 in the morning. If you're not yet in a trade and you're getting ready to take a trade and you realize, oh, it's almost 10 o'clock, maybe just give it a few minutes, right? And then it goes by, whatever happens or doesn't happen is done, and you're good to go. So without any real economic agenda on the table, we're more focused on just, well, what do we have, right? And you can see we've been kind of bandying about here in the S&P within this scope or in this range. We finally broke out of the top of it during that impulse move last night, and we are right back inside of it, right back in the box. The same thing down here, right? We had left the box, we came back in, we're back in the box. There is a high expectation that we stay in the box, that we don't do anything today. The box at this point in time is a very large, very wide box, right? We have a very narrow IB, initial balance, but we've had a very large Globex, right? We've kind of ran around all over the place. So if we mark from the Globex high to yesterday's lowest point, you can see we have a large amount of price action to cover. It is very, very likely that we're going to stay inside of this all day. And it may or may not be some decent trading. Yesterday, obviously, even in that compact environment, there was a few opportunities. Nothing that I really liked, but right, there was some plays in there. The NASDAQ for me yesterday was the better opportunity. Yeah. So, for today, we're down a 0.25% already. If we were to make it back down to those lows, even from our current location, we're looking at another 0.5%. And that's right in line with the ES having that average daily range of less than 1%. A 2% move right now would put us at 47.87. That'd be a 2% move from the close. Obviously, That seems a little unrealistic at this point, but that would have been a 2% move from the close. Now we've done a lot of running around this morning. The yellow lines that you see moving are a part of that expected move measurement or daily range measurement. So you can see even that right now with the amount of time left in the day and the level of volatility, we could easily get to 46.80 without even trying all that hard. I don't see us maintaining a move below the low of the day unless things come in with some kind of news, right? And that would be obvious. It would be totally in your face. It would not be sneaky or subtle. I don't think that there's any way that you could miss it. If we start getting some break and moving in that direction with strength and conviction, you'll see it across the board. That would be my target, though, if we do start breaking low again. Right now, we're kind of holding in this failed flag setup. I like these failed flag plays. Snap a fib on there, and the 786-100 becomes your channel. And then you're looking for a break out of the channel and Busby. Wicks can really throw this off, but it's more of the idea of just using this to visually and consistently trade it the same way every time. A failed flag is still going to be a failed flag, no matter if you have that Fibonacci drawn right or not. So I wouldn't stress on it too much. The goal would be taking us back up to the previous range, right? It ends up forming a cup. And right now, this is the base of that cup. So, don't try to get in at the very bottom. You're not that good. And, don't expect to run it to the very top. You're not that good to do that either. So that deals with the ES. Bring in the NASDAQ. We've got a relatively muted range, all things considered, here in the NASDAQ. We are positive, by the way, near 0.5%. We do have the weekly expected move in this market as well. We were really working on it when we came into the Globex here. Tagged it right before the close yesterday. Since then, we had that little move we were talking about, and then the Austrian news and everything else. We've just been working our way down. Seems to have satisfied a low, and we're working our way back up again. It's not much of a surprise that we're fading back down first. This impulse move creates a liquidity vacuum. And so what you will see a lot of times when a market makes a move like this is that it will go back down. It will work its way back down and basically reset. It'll go back to where it was. And it's basically saying, let's do this move again, but with conviction. And it'll come back down to where it started. And then it will build its way back up, making higher highs and higher lows in an actual trend rather than an impulse. Okay. So, we often see that in the kill zone, right? That time between 2 and 4 where we get these blowout moves like an impulse move, and then around 4 o'clock that ends, and then the market spends the next 2 hours or so unwinding that move. This happened a lot sooner, of course, but same concept, same theory. And since you know the time frame between 2 and 4, you can go back and try to identify those old kill zone moves and kind of try to spot how many times after such an impulse it spent the rest of the time unwinding that impulse before continuing on. So a little bit of interesting logic. So for the moment, we're off of the highs, but we're off of the lows. We're sitting right in the middle. There's no reason to try to struggle in the middle. If this is our range for the day, I'm not really going to be interested in trading it in the intraday. I'd be looking for an opportunity to actually take this somewhere. So off of the lows back to the highs, off of the highs back to the lows, or off the highs then breaking out, right? Maybe we get some kind of Busby off of those highs. We get an opportunity to play it from that direction. A move to the downside, if we can break back inside that weekly expected move, then we'll be looking to challenge Uh, the pivot point right around 16,425. That would be my target down in this area. And when we're talking about weekly expected move, this is what I'm talking about, guys. This indicator with the green and red lines based on implied volatility values from the options chain. You can see it plots a week ahead. Here it is Friday, and it's already drawing next week's box. It's still in play right now. That box is moving up and down with price, but Friday at the close today, this box will get locked, set in stone, and that'll be that. For you people that don't trade options, your uh, lack of understanding on options is a serious handicap to your trading. If you were to pick up some options logics, it would improve your trading exponentially. No matter if you never trade an option in your life, just being able to understand the tools available uh, and how powerful they are. All right, trading view. S&P 500, pre-market change percent. We'll use the filter to bring the names down to around 100 names. And I just adjust the color skew just a little bit so it kind of makes things pop a little bit. We got the watch list right next to it. You can sort this by positive and negative. So retail is looking really good. I was going through and doing a little bit of work on the Dow last night, kind of like my default watch list. And less than 1/3 of the names in the Dow were upside plays near their highs, and 2 of them were impulse moves that I wouldn't be trading anyways. So it's not looking all that amazing out there. We're getting these amazing runs, phenomenal day trade opportunities, just inconsistent swing trade opportunities. And the capital rotation, the MOC yesterday was significant, 200 and something to 100. So that's a real big deal to recognize. And I haven't had a chance today to go in and do it, but to recognize that there is a massive capital rotation going on. Seeing what names are in that MOC list from yesterday would be a huge benefit. There is only one site left that I know of that provides the MOC report, and that would be Market Chameleon. Yeah, the numbers yesterday, I was a little off. Buy side was 88, sell side was 152, but still almost a 50% more, right? More than 50%, maybe 75% more sell side than buy side. Finance is just getting annihilated in here, right? And, oh, we're going to make it through the day, and we're going to be focused on next week. We're still in a very bullish market, even if this doesn't look very good, and even if this doesn't feel very bullish. Coming out of that earnings season the way we have, with such amazing numbers, the market has just really been absorbing that. But it's only going to get us so far. All right, so here's the NASDAQ 100. You can see technology services is looking reasonably well, and retail trade also looking good. That's an amazing move in Inuit software. My goodness. That's a little bit of a surprise. That caught me on off guard for a moment. All right. So as usual, when we come in and we look at this list, we want to try to get a grasp or a scope of where we should be looking on the day, right? What sector, subsector, or industry is hot this morning that we should be pointing our attention to? Right now, the filter is set asking how many names are up in the pre-market, at least a half of a percent, not even not even 10 names, right? And that's the S&P. We want to answer the same question in the Nasdaq. The Nasdaq has 14 names up this morning, at least a half of a percent. That's not overly bullish. It's not inspiring a lot of confidence. uh, a lot of the chip names I see are in there this morning, and communications. I am interested though how many names are down a half of a percent this morning, an equal number, right? Same amount up as down in the Nasdaq, and for the S&P, oh yeah, 25% of the S&P is down at least a half of a percent this morning. That's gets my attention, right? So, maybe trying to identify, well, what names? Finance looks like it's really getting kicked in the teeth. There are no financial names in the Nasdaq 100, right? So it's one of the reasons that the Nasdaq seems to be doing reasonably well this morning, while the S&P is not, right? A nice double bottom down there, but I don't think that has all the information we want. All right, so that takes care of Trading View. He's Trend Spider for this part quite a bit, bringing up the sectors and kind of asking the questions: which sectors should we be focused on? These sectors are based on S&P logic. This is old school stuff, right? It's kind of dated. There's such a better way to do things than this, but there's still a lot of old timers that run, trading firms, trading institutions, and teach new traders. And so this continues to live on just because the new generation is learning from the old generation, and the old generation still uses it. But you can see chip names are weak this morning. We'll just break away from this and do it in sub industries. Chips not looking, too good. Pot stocks, it's kind of a mixed bag. When it comes to these pot stocks, maybe breaking them down into recreational versus medicinal, and or maybe some of those that are real estate names, right? Because obviously the pot industry had to have its own real estate. That's the sector that I was trading in the most. So pot stocks, chip stocks hit the EV market. Take a quick glance at that, see if it's got any opportunities. Energy was really getting beat up yesterday, so I'd definitely be looking at it today. Just remember that energy and finance have been so tightly correlated this year that, with finance being down so significantly, it's very likely that you're going to see energy down as well. But we're going to go over and take a look at energy either way. Before we get there, though, we may as well look at crypto, see if there's anything in this. Bitcoin was down overnight, so not going to be, expecting very much on the crypto side. Really should call this blockchain, not crypto, right? Because it's not like we're looking at crypto names. It's more blockchain names. And it also seems to be a mixed bag as well. All right, the energy market. Everything red, just like finance. But when we talk about energy, we got a couple of different directions that we can go. We got utilities, which don't seem to be doing as bad as just quote energy. And then we've got oil and exploration, which is really down this morning, and oil services, which are also mostly down this morning. Airlines are down, which means the cruise lines are most likely down. And all of the financials So that sector really needs to come back around, or we're not going to get anywhere, right? We're not going to have a good, clean, strong trend day in the marketplace if we can't get finance and or technology working together. Uh, One or the other can carry one of the indexes. So, if technology runs, the Nasdaq can have one of those days. If finance was to run, then the S&P could have one of those days. Keep your eye on the Russell as a crossover play today, just kind of using it for your tool. And then, of course, speaking of the tools, no, wrong one. Speaking of the tools, keep your eye on the bonds. You can see how that significant move in the bonds in the overnight hours ties in exactly with that, right? And then you got the move in the dollar as well. And it isn't the old question of the chicken and the egg. You can see obviously that the dollar moved and then the indexes moved a few minutes later, right? So there is no which caused which kind of discussion here. There's no doubt or confusion, no ambiguity. The dollar made a significant move in the market and it affected all of these indexes. This is one of the reasons why I say watching the dollar and watching the bonds can provide early warnings and a heads up. That one Marbozu candle right there would have been a significant change event worthy of attention. And for anybody who was trying to trade at that time of morning, it would have been a good idea to not try to buy off the low, which is, typically how I trade. I buy off the lows and I sell off the highs, and I don't look for breakouts because we don't normally get a breakout, right? Yet in a situation like that, when we are fading down into a support level and I'm thinking, oh yeah, I'm going to get ready to buy this again. Not when that happens. Then we just stand aside and look to see how it's going to resolve. Once the trade was in play, the candles started to unwind. Then we had an opportunity to participate and play. All right, so keep your eye on the dollar, keep your eye on the bonds. These two tools, especially at night when you don't have Tick, Tran, AD, Market Breadth, and all the other tools, these two are a significant source of perspective, and they're one of your greatest tools other than the clock itself. I will be streaming in the futures room today, is what I do on Fridays. Other than that, everybody have a good weekend, and I will see you all next week.